Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.3% there. On the S&P Nasdaq, 6.6%. Same with the semiconductor Dow, 0.2%. Russell 2000, transport, banks, energy, and biotech. All these guys are printing red numbers today. Notably, energy continues to get hammered here. 2% negative today. Healthcare up 0.6%. Utilities up 1%. Home builders down. Retail down. Emerging market down. Gold, silver, miners, and Bitcoin. These guys are down quite a bit continuously here. Notably, the Bitcoin, dollar up, oil down, treasury bond down, VIX is down a little bit. Let's go to S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday, and looks like we kind of opened flat. A little bit of that fluctuation on that first hour, and looks like we actually saw a little bit of that decline on the second hour and the third hour. Looks like that midterm moving average is kind of acting as a micro-term support here a little bit. You can see 3 hours of this morning's session, and it looks like we did see a little bit of climb 4th hour and 5th hour, and then on the last 6th hour you can see it looks like the prior resistance, the micro I'll really look at this 382 level as a micro term pivot, because we can see that only the last hour, the 6th hour, we kind of hanging out above this level at 382. So I mean, if you watched my video yesterday, I emphasized the fact that buyers need to see a strength, a follow through to the upside. I really can't look at this as a strength. This is better than nothing. This is better than a decline, better than a red day, better than a tankage, better than a shenanigan to the downside. This is better because more or less this is, we can look at that as a follow through, just not a strong one at this time. The reason why we needed a follow through is because we've been in this consolidation right here. You can see, we will see these pops, 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 right? So you can see last several days, some of these pops did not see the follow through to the upside. Same thing happened here, did not see the follow through to the upside. Same thing happened here, did not see the follow through to the upside. And this is the first time since last, I don't know, 5-6 trading sessions here, we're seeing you know, weaker follow through, just because we're still in a midterm downtrend, which we've been talking about this entire year. Because of that, if buyers want to gain some momentum, they will need more than this. So I think bulls are not out of the woods, even with today's price action. Yes, we did see a little bit of follow through. Market is up about 0.3%, but that's not enough because bears can bring it down any time of this week if they choose to do so. So just because we're still in a midterm downtrend, how do we know that? My midterm moving average in its trajectory, right, is still declining, right? Price is above it, but remember, price slightly getting above the midterm moving average is not as important as the trajectory, the direction of that midterm moving average. And so obviously, before we can say that the midterm trend has been shifted back to bullish, we will need to see that midterm flattening out first and then rising, and it's going to take weeks. So just a couple days of move, we cannot say that the midterm sentiment, the midterm trend has been shifted back to bullish. So going into tomorrow, should there be any kind of decline, obviously 382, I will look at 382 as a micro-term pivot. And then we got the next level here, 379 as a short-term support, and the midterm support at 373. And obviously, you're a buyer here. You've been desperately seeking higher prices. Well, you must protect 380 level with everything you have, especially for this week. You have to hold above 380, 378 or so. You must stay above it. You must close above it this week. By the time Friday rolls around, at close on Friday, if the price is down here, you're seeking trouble for the following week. By the Friday rolls around and the price is somewhere up here, there's hope for the month of July. By the Friday rolls around, the market is just shifting sideways. Hectic going into next week, right? So that's kind of the sentiment that we're in today. Let's check out that oscillator. See if you can extract any more information. So that oscillator, as we've been talking about it, that oscillator, we do see pretty strong bullish divergence, right? You can see the slope, the angle of that thing. And so the bullish divergence is special compared to the ones that we've been seeing last several months. However, without the follow through, without the strength to the upside, that bullish divergence can be wasted. It could mean nothing, right? Because all signals can fail. Bulls must substantiate this signal, and if they want to materialize from this, right? That means bulls, it's not overbought yet. As you can see right here, we got the little bit of the space left. That means bulls do have energy to push at least one more day before this thing gets to the overbought level. As you can see here, we got a little bit of the space, and bulls cannot waste it. If you waste this, and if we just see not so much of a move tomorrow, things are going to look hectic here, and bears are going to bring, because bears are just kind of waiting until bulls get higher, and then they're just going to bring it down, and that's what they've been doing this entire year. So if bulls want to make a statement, if bulls want to change this short-term, mid-term sentiment into somewhat bullish, they must show strength, because right now the oscillator is supporting the buyers with this bullish divergence signal, and the market is not overbought as of today. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go train tomorrow.